Welcome to The Explainer. Today, we're going to cut through all the noise with a simple, straightforward guide to investing made just for college students. So, you're in college, you're heading the books, maybe you're working a part-time job, and you keep hearing this buzz about investing, about making your money work for you. But let's be real, where do you even start? It can feel pretty overwhelming, right? Well, don't worry, we are going to break it all down. And to make this super practical, let's follow the journey of a guy named Samir. He's 19, he's a student, and he's asking the exact same questions you probably are. We're going to walk through the step-by-step advice he gets so you can build your own solid foundation. Now, before we even talk about a single stock or bond, we need to cover your number one priority. And honestly, it's probably not what you're expecting at all. That's right. Your most valuable asset right now isn't money. It's your education. Pouring your time and energy into acing your classes and getting that degree, that is the single best long-term investment you can possibly make. The return on this is going to be higher than anything you'll find on Wall Street, guaranteed.
So here's the bottom line, and this is crucial. Your efforts in the market should never ever come at the expense of your efforts in the classroom. The goal here is to make them work together, not have them fighting for your attention. All right, with that really important foundation set, let's move on. Before you can play any game, you have to learn the rules and the language, right? So welcome to your crash course, Investing 101.
Okay, first thing you need to get in your head is that this is not a get-rich-quick scheme. Real investing is a long-term game. The reason everyone says to start early is because of this one kind of magical thing called compound interest. It's basically the idea of earning returns on your returns. Time is literally your superpower as a young investor, so understanding this long game from day one is absolutely key. So let's quickly break down the main players on the field. First, you've got blue chip stocks. Think of the huge, stable companies you know and see every day. They're generally lower risk. Then, on the complete opposite end, you've got penny stocks. These are the wild cards, incredibly high risk, but they tempt people with that potential for a massive reward. And somewhere in the middle are cyclical stocks. Their success tends to ride the waves of the economy. They do well when things are good and not so well when they're not.
So how do you learn about all this stuff? Well, think of it like required reading for a class you actually want to take. Dive into some good basic finance books. Read what legendary investors like Warren Buffett have to say. His yearly letters are pure gold. Look, the goal isn't to get rid of risk. That's impossible. The goal is to get smart enough to manage it.
Okay, so once you've done a little reading and you're starting to get the language down, it's time to figure out what kind of player you want to be on this field. Are you a sprinter or are you a marathoner? These are pretty much the two main paths. Are you the sprinter? You might lean towards growth companies, taking on more risk for a shot at a much bigger reward. Or are you the marathoner? You'd focus on those steady, stable blue chip stocks, maybe ones that even pay you back a little something called dividends. That path is all about long-term security. And listen, there is no right or wrong answer here, just the one that's right for you and your goals. So whether you decide you're a sprinter or a marathoner, the next question is the exact same for both. How do you actually spot a company that's worth investing in? It really comes down to three key things. First, look at the cash flow. In simple terms, is the company bringing in more cash than it's spending? Second, look at who's in charge. Is the management team experienced? Do they have a good track record? And third, prioritize stability. Does this company have a strong position in its industry that's tough for competitors to break? And trust me, this stuff matters so much. Why? Because a company can have the most brilliant idea in the world, but with poor leadership, it can still crash and burn and lose you money. But on the other hand, a stable company with great management is way more likely to give you that long-term security and, in some cases, even share their profits with you through dividends. All right, let's wrap this all up. If you only remember a few things, make it these. First and foremost, your education is your number one investment. Always. Next, learn the basics before you put a single dollar on the line. Get a handle on the different stock types and the risks that come with them. Then, figure out if you're a sprinter or a marathoner. Match your style to your goals. And finally, when you do start looking, focus on stable companies with great people in charge. Look, at the end of the day, this whole guide is just a starting point to help you build a powerful financial future. It all kicks off with that most important investment, yourself. So the only real question left is, what's your second going to be?